What is going on, guys and girls? Welcome back to another video. Jonny Godfrey here. Today, we want to be looking and answering a question on a lot of people's minds. Is the Bitcoin bull run over? What we're going to do is we're going to have a look at the technicals on the higher time frames, specifically the daily chart. Going to dig into the 4-hour chart as well and have a look at what the technicals are giving us indications of. Then what we're going to do is go through, look at some on-chain metrics, which I think are very interesting, because that's how you build a thesis. That's how you build a bias, is you look at all the underlying metrics, and that's how you can then develop not only where you think that everything's going in the short to medium term, but also the longer term sort of price predictions, et cetera, et cetera. So that's what we're going to be doing today. So first thing we're going to look at is the Bitcoin daily chart. We're going to look at what price has been doing over the past sort of couple of weeks before we then hop onto those on-chain metrics and I start to build this thesis and show you exactly why my opinion is what it is. Technically speaking, we've seen this enormous bull run on this daily chart. Price has had the odd sort of 20 to 30% correction along the way, but nothing deeper than that at this point. 30%, 20% corrections are very typical in a Bitcoin bull run. It's just the market dynamics of the crypto space. So absolutely no cause for concern. We had previously seen at the end of February this pullback, which was around 25%, down to around the daily 50 MA. This previous low, which when we broke up and formed this new all-time high, we had a quick little pullback before that next surge up, giving us that all-time high of around 58,000. And we ended up holding this as support. My expectations were we could see this pull back a little bit deeper, retest this gap, retest that previous all-time high. It doesn't happen all the time, but it's something that's relatively likely, especially when we start a pullback, and also pull back to this daily 50 MA like we previously have. So we didn't end up getting that. We ended up forming a W pattern on the lower time frames and also a couple of cup and handles, which we then broke to the upside. And over the weekend, we ended up seeing this all-time high printed of around 61,844. So that all-time high has been printed over the weekend, which isn't something we typically see. We usually see all-time highs hit and taken out into that new discovery phase. We usually see that on a weekday, which is interesting, but doesn't really indicate to too much. So when we opened up on Monday, markets open from the new week, we saw a instant fall from these highs, literally at 12 a.m. GMT. When it switched to Monday, we saw this sell-off occur and price pulling back. When we think about market dynamics, the way that markets move, no matter what their assets are, they can't move in one direction without pulling back, because it just means that everyone would be a billionaire. If you could simply just buy in with a futures trade or spot, if you buy in as soon as we break out with the expectation it's only going to go up, you're going to be very, very humbled quickly in these sorts of markets, because that doesn't typically happen. The reasoning behind that is if it did just simply move, if it always simply broke to new all-time highs after breaking an all-time high, everyone would be a billionaire. Everyone would be rich. There would be no liquidation in the market. There would be no people's positions getting wiped out, and everyone would just be a winner, simple and fact, which is not something that can happen. People have to lose for other people to win. So when we have a look at what happened, we took out this all-time high before then pulling back on this Monday. A good reason why this all-time high didn't sustain, we didn't end up holding this previous all-time high of around that 58,000 region, is we didn't really have much volume in the markets. What we typically see when we break all-time highs, we can see from these sort of spikes, when we break these all-time highs, we usually get volume spikes showing that increased demand, showing that everyone's purchasing, and that's what then sustains that bull run. We didn't actually get that for this leg when we broke out. We can see volumes pretty low, which is why we ended up having that pullback. That's just sort of a quick insight into why markets do move up and down, why they have to pull back, why they have to breathe, why they don't always move in the way that everyone expects. And to really demonstrate that, we can look at the futures long liquidations, how many long positions were liquidated over the last sort of 3-4 days when we've had that pullback. So a lot of people would have jumped in with these long futures trades as we had that breakout, expecting price to just continue. It's people who are new to the market, people who are inexperienced, they expect when we break out, we're going to the moon. We're all getting Lambos soon. So what we end up seeing is price had broken out, volume comes in, we see large amounts of orders open as that breakout occurs. So then as price starts to pull back, it then traps, as a bull trap, it then traps those people on the wrong side of the market. And what we've seen over the last sort of 3-4 days, a total of 738 million liquidated long positions, which is what the markets have to do. They have to trap people on the wrong side in order to create the liquidity underneath in order to power the next wave. That's where that volume will kick in. So that gives you a sort of indication and an explanation of why markets don't just move in straight directions, why we have to have those pullbacks in order to create the liquidity in the market. Another thing that's interesting to look at is how many number of whale addresses. So a whale is classified as an address which has either a high net worth individual or a corporation, which has over 1,000 Bitcoin in their addresses balance. And what we've seen occurring is throughout the entirety of this bull run, whales have been accumulating. The addresses have continued to grow as institutional capital flows in, and that larger institutional adoption and acceptance that this is a great play for a various amount of reasons. We've seen that increased demand from institutions, from high net worth individuals, and we've seen those addresses growing steadily across the entirety of this bull run. What we've seen over the last sort of month or so this was the beginning of February, what we've seen over the last sort of month or so is that whales have started to profit take. This is very usual. This is intelligent money. These are people with huge amounts of capital in the game. They're experienced, and they know as markets start to push into new discovery phases, hitting new all-time highs, they're going to be gradually taking profit off the markets throughout that entire period. So to demonstrate that and to demonstrate why this is not the end of the Bitcoin bull run, we can look back to 2017. So when we look back to 2017, when that bull run really started to kick off, and price starts to increase, we can see the number of whale addresses when price starts to really pick up. Throughout the entirety of this bull run, we've actually got whales taking profit because it's intelligent money, it's intelligent capital. And on the way up, that's what they aim to do. They'll aim to lock in partial profits all the way up versus a retail trader, an inexperienced trader who just looks to YOLO the whole thing when we get to all-time highs in the expectation that it's going to continue to the upside. So although the whales are starting to profit take, it's definitely not a bearish indication at this point, as we can see demonstrate from that 2017 bull run. And the fact that this profit taking has only just begun around this 60,000 region is a pretty bullish signal. So when the profit taking happened in 2017, we were sat around a 4,000 level. Price then still increased over 500%, pushing to those 20,000 levels through the entirety of the whales profit taking. So if we think about where the markets are at now, if the whales are only just starting to profit take, if intelligent capital is only just starting to really profit take versus accumulate, then this is an indication that we could see something similar to 2017 bull run, where we could see another 500% before that larger correction occurs. That would take us up to these regions, which a lot of people are calling around that 250 to 300,000 per Bitcoin level. Something else that we can look at is the net unrealized profit. I'm not going to dig into exactly what these metrics are. If you want to understand, otherwise this video would be crazy long. If you want to understand them more, Google about them, sign up to Glassnode. Glassnode is an epic resource if you're interested in these markets and understanding all of the data behind what's driving the price. So we have a look at NUPL. What we can see is we're having a pretty healthy growth, and we're not actually at that euphoria greed stage yet. When we did get to that stage previously, we still saw large increases before we then saw the sell-off. But this is a good indication that we're not at those levels yet where it's starting to become a danger. We've had this healthy increase up. We can see that pretty clearly from here. We're still not into that blue region yet of euphoria and greed, which is where we see that huge amount of volatility kick in as every retail trader FOMOs in. You hear about everyone talking about it in the pubs, although they're locked down at the moment. You hear about your barber talking about it. You start getting random messages from people saying, should I buy Bitcoin? And it's like, well, you should have bought it when it was 3,500 a year ago versus 60,000 now. You can see we're clearly moving up in a healthy bullish range. We're not at that overheated stage. So it still supports that there's further momentum that can be had in this bull run before we approach levels where we start to flag danger systems. And we can see all previous bull runs have got to these levels and then the price drops. We've got to that euphoria greed level, price pulls back. We've got to that euphoria and greed level, first time in 2013 when we pushed above that $1,000 level per Bitcoin. We then had a huge sell-off down to those 200 regions. And then 2017, same thing, push up to that 19,000 region, into that euphoria and greed, and then price sells off back down to that 3,500 level, 3,800 level. Overall, it still supports the thesis that the bull run is not over at this point, and there is still further momentum to be had because it's not showing an overheated market. Lastly, on Glassnode, what I want to look at is this Hoddle ratio, this realized Hoddle ratio. Again, we can clearly see that this is a good metric, on-chain metric, that demonstrates to us when the bull run may be over, when we can expect that larger correction. When we've previously seen this realized Hoddle ratio, this metric push up into this red zone, it's when price then pulls back. So we can see that from the previous bull runs, including that 2017 bull run where we saw a push up into this red zone as markets overheated, as huge amounts of volatility kicked in. And then that's when we saw that 20,000 pull back down to those mid 3,000 regions. So again, it's showing us that we're not overheated. We still have a lot of capacity before we approach that level of danger where that huge amount of FOMO kicks in, the euphoria stage starts. And similarly, backing up what I was talking about previously, looking at these sort of levels, relating it to this is kind of feels like the equivalent of when we were at $4,000 in 2017 in that epic bull run. This backs that up further. So when we have a look at the Hoddle ratio, we're at similar levels to where we were when price was around that 3,000, 4,000 region back in 2017. So from here, again, we've had that 4,000 growth to around 20,000, and this further supports that we could be seeing at some point in the not too long-term future that move to that $250,000 to $300,000 Bitcoin, if not more. If that massive FOMO kicks in, we could see it volatility spike to even higher than that. So another metric that further supports this bull run is not over, and we've got room to the upside. Right. Another thing is stablecoin supply ratio. When stablecoin supply ratio, i.e. the amount of stable coins being held on platforms, increases, this is the volume which usually we're looking for. So typically traders, when they get out of positions, when they hold profit, when they're getting ready to buy, they'll have their stable coins on platform ready to go, because the typical procedures for most exchanges is around a 3 to 7 day period, which will take you to get your capital from your bank ready on that platform, ready to execute when the opportunities present. So when the stablecoin supply starts increasing, it's a suggestion that traders, investors are getting their capital ready for that next bullish wave. So when that stablecoin supply, there is no other reason why they'd be holding stablecoins on platform other than they're getting ready to invest in. You wouldn't hold it on there, you'd hold it in your bank account. So this is capital that's being transferred onto exchanges that's staying in stable coins. And it's a great indicator of when the next bullish leg is coming, as we can previously see just from this earlier in the year. When that stable coin supply ratio increases, that's when we then start seeing these large price movements. We also have another metric, which is total supply held by short-term traders. And this is also a good indication of when the bull market isn't over, when we haven't overheated yet. And we can see, similar to the other metrics, these have all worked in previous bull runs, which is the only sort of data that we can really be basing our analysis off at this point. Technicals with how overextended the run is, there's nothing really on the higher timeframes for us to get an indication of where we could expect price to go. So it's about digging into the metrics, comparing it to previous data from previous bull runs, and then coming up with our thesis and bias. When short-term holders are increasing, it's because of the expectation that the price is going to appreciate. It's expectation that price, that's what they're looking to do. They're short-term holders, they're simply looking to speculate on increases in price. The fact that the supply held by short-term holders is increasing is an indication that we're still very much bullish, and we haven't breached, similar to what we've seen in previous bull runs, where we're going to see that market being over-exhausted and in need of a deep correction. So again, we still have room to move to the upside. Lastly, I thought this was a super interesting one from this company called Sentiment. What this is showing us is whale transactions, so anything that is over 100,000 plus on platform. And yesterday we saw the largest amount of $100,000 and above transactions since February 24th, indicating that whales are now again accumulating. So what I think is quite interesting is when we look back at the whale addresses, which are decreasing, we've had that sort of 5.5, 6% drop off over the last month, showing that they're taking profit. What we can be thinking about is, who are they actually selling to? Are they selling to other institutions? Are they selling to other corporations? who are now following suit of Michael Saylor, of Elon Musk. So I think it's very interesting when we start thinking about, okay, well, who are those whales actually selling to in order to take their profit? And it could be further institutions. So although the addresses over 1,000 are decreasing and we're seeing that profit taking, are they selling to other corporations who are starting to scale in, following suit? So it's indicating that there's still that demand coming from these larger institutions and high net worth individuals. So although that the really big whales are selling off and taking profit, is it because they're selling to other corporations, other high net worth individuals who are now looking to stack and stack, which can only be a bullish confluence? So that's really everything that I wanted to share. I hope that gave you some insights into why I don't think that the Bitcoin bull run is over, but also a sort of indication of we could see a deeper pullback. So let's quickly finish this up by having a look at the technicals on the lower timeframes. We're holding this region of around 55,000, which is 0.382 fib retracement, which is pretty typical pullback, as well as around that 4-hour 50 EMA. If we can find support here, we can very much start the next leg from here. One thing that I do think is interesting is obviously that volume that I talked about at the beginning, but also this divergence that's coming on the MACD. So we're getting strong bearish MACD divergence, i.e. we're forming higher highs and higher lows, but the MACD has now started forming lower highs and lower lows. So that is definitely an interesting technical perspective. Bitcoin seems to do what it wants and not always respect the technicals. But another indication that we may be getting a deeper sort of correction is the 1 hour chart. So on the 1 hour chart, we have a look at what's potentially developing. We have a potential left head, and then we could be coming back up, retesting that 1 hour 50 EMA and forming a right shoulder. So then if we have a look and draw in head to neckline to get the target of what it would look like on a break, if that does develop a right shoulder, break down, retest the neckline, we could then see a further push down if we do break this 55,000 region as support, down to around that psychological level of 50,000. That would be the first initial profit target for the immediate term if we do form that right shoulder, which aligns with 0.618 fib retracement, which is the golden ratio. So overall, I think that there is a strong possibility that that might play out. We could see that dip down to 50,000 before we then see that next leg up. So yeah, that's going to wrap up. Hope that was insightful. If you're not subscribed, make sure to go subscribe now, hit that bell button, hit the like button for the YouTube algorithm. I did not even want to say that, but I did it anyway. Just sold my soul. But yeah, catch you on the next one. Peace out. Goodbye.